Welcome to Gorilla Ether, your bridge between traditional finance and the decentralized future. We provide blockchain tutorials, Web3 education, and investment services that demystify on-chain finance and empower your financial literacy. Join us as we explore the philosophical shift from off-chain to on-chain, because understanding the future starts here. Hello, everyone, and welcome to today's video on optimal banking strategies for U.S. citizens running small businesses while living abroad. If you're an American expat entrepreneur, you've probably struggled with the question, should I use U.S. banks, foreign banks, or both? Today, we're going to explore a hybrid approach that combines the best of both worlds while keeping you compliant with FBAR and FATCA requirements. This strategy will help you minimize costs, reduce compliance headaches, and keep your business running smoothly, no matter where you are in the world. Let's dive in. First, let's talk about why traditional approaches fall short. On the left, we have pure U.S. banking. While it keeps you compliant, you're going to pay dearly for it. International wire fees add up fast. Exchange rates typically have a 3 to 4% markup, and your foreign clients will find it complex and expensive to pay you. It's also difficult to access your money when you're overseas. On the right, pure foreign banking seems attractive at first. Better exchange rates, easier for international clients. But here's the problem. You're looking at complex FBAR and FATCA reporting requirements, currency gain and loss calculations for your taxes, and you risk losing your U.S. banking relationships entirely. Plus, paying U.S. vendors becomes a nightmare. The solution? A hybrid approach that leverages the strengths of both systems while minimizing the weaknesses. Here's the core principle of the hybrid strategy. Use U.S. banking as your primary business infrastructure and use international payment solutions as efficient processors and currency converters. Let me break this down. For your primary U.S. bank business banking, you'll want an account with Chase, Bank of America, or Wells Fargo. This serves as your main business account and financial hub. The beauty here is no FBAR reporting. You maintain your U.S. banking relationships, and tax compliance is straightforward. Use this account for U.S. payments, business expenses, payroll, and tax payments. For strategic international payments, I recommend Wise, formerly known as TransferWise. This acts as your international payment processor and currency converter. You get much better exchange rates, local bank details in multiple countries, and significantly lower fees. The key strategy here is to keep your balances low and transfer money to your U.S. account regularly. Use Wise for receiving international payments and converting currency. Think of your U.S. account as your vault and Wise as your loading dock. Let's walk through how this actually works in practice. Step 1. Your international clients pay into your Wise account using local bank details. To them, it looks like they're making a domestic payment, which means lower fees and no hassle. Step 2. You convert the currency to US dollars in Wise when exchange rates are favorable. You have control over the timing. Step 3. Transfer the USD to your US business account weekly or monthly. This is typically free or very low cost. Step 4. Operate your business from your US account. Pay expenses, handle payroll, make tax payments, all from this central hub. And step 5. For small local business expenses abroad, use your Wise debit card. The key principle here is timing. Keep Wise as a transit account, not a storage account. Transfer money to the U.S. regularly to minimize your FBAR exposure and simplify compliance. Now let's talk compliance, because this is where the hybrid approach really shines. Your U.S. accounts are exempt from FBAR reporting. No Form 114, no Form 8938, just standard U.S. tax reporting. This is huge for simplifying your life. Your WISE accounts, however, must be reported if your aggregate balance exceeds $10,000 at any point during the year, even if just for a second. You'll need to file Form 114, the FBAR, by October 15th. If you hit higher thresholds, you may also need Form 8938, and you'll need to track currency gains and losses. Here's your compliance minimization strategy. Keep your WISE balances under $10,000 to avoid FBAR requirements entirely. Make regular transfers to your U.S. account weekly or monthly. Document everything with detailed transaction records. And consider hiring a CPA who specializes in expat taxation. This approach can literally cut your compliance burden by 60% compared to pure foreign banking. Let's talk about your personal banking setup, which should complement your business structure. For your primary U.S. personal account, I highly recommend Charles Schwab's checking. There's no foreign ATM fees, and there's worldwide access, and it makes this a digital nomad favorite. You'll also want a local foreign account for daily living expenses like rent, utility, and to maintain local regulatory compliance in your country of residence. And finally, a WISE personal account for multi-currency management, travel, and international purchases. Some additional tips. Structure your income to qualify for the foreign earned income exclusion, which can exclude over $120,000 for 2024. Use multi-currency credit cards like Capital One or Chase Sapphire that don't charge foreign transaction fees. And maintain a U.S. brokerage account for retirement planning because many foreign brokerages won't accept U.S. citizens due to FATCA regulations. Now, what's the optimal business structure for this setup? I recommend a single-member LLC with an S-Corp election. The LLC gives you liability protection and operational flexibility. The S-Corp election provides payroll tax savings on profits above your reasonable salary. You get pass-through taxation, which avoids double taxation complexities. And if you form a Delaware LLC, you may find it easier to maintain banking relationships, and you get some additional privacy protections. For your tax strategy, take advantage of the foreign earned income exclusion, which can exclude a significant portion of your income. Use the foreign tax credit for taxes you pay to foreign governments. Pay yourself a reasonable W-2 salary if you've made the S-Corp election. And don't forget business deductions like home office, travel, and equipment expenses. What should you avoid? Foreign corporations, which trigger controlled foreign corporation rules. Complex multi-entity setups, PFIC investments, which are passive foreign investment companies, and foreign partnerships. These all create unnecessary compliance nightmares. Keep it simple. Let's talk about implementation. You can have this entire system set up in 30 to 60 days. In weeks 1 to 2, open your business checking account with a major U.S. bank. Research your EIN requirements if you don't already have one. Weeks 2 to 3, file your LLC formation, obtain your EIN, and consider the timing of your S-Corp election for the current tax year. Weeks 3 to 4, open your WISE business account, complete identity verification, and get local bank details for your key currencies. Weeks 4 to 6, test your payments flows, set up your regular transfer schedule, and configure your accounting systems. And then in weeks 6 to 8, fine-tune your processes, train your team and clients on the new payment methods, and monitor compliance. You'll need professional support. A CPA who specializes in expat taxation for ongoing compliance, an attorney for business formation and international tax planning, and ideally, a relationship manager at your chosen U.S. bank. Let's talk numbers, because this is where the hybrid approach really proves its value. For a business with $200,000 in annual revenue, here's what you're looking at. Pure U.S. banking costs you $6,000 to $8,000 in exchange rate losses, $2,400 in wire fees, and about $1,000 in compliance costs. Total annual cost, $9,400 to $11,400. For pure foreign banking, it reduces the exchange rate losses to about $1,000 and wire fees to $800, but compliance costs jump to $3,000 to $5,000. Total, $4,800 to $6,800. The hybrid approach. Only $1,200 in exchange rate losses, $600 in wire fees, and $1,500 in compliance costs. Total annual costs, just $3,300. That's a savings of over $6,000 annually compared to pure U.S. banking, and you're reducing compliance complexity by 60% compared to pure foreign banking. Plus, you get reduced administrative time, lower risk of compliance errors, improved cash flow management, better currency risk control, and a system that scales as your business grows. So what should you do right now? This week, assess your current situation, document your existing accounts and compliance requirements. Choose your U.S. bank, research which major bank works best for your specific situation. Identify your professional team by finding a CPA and an attorney who understand expat business taxation. You'll need to prepare a business plan summary, pull your personal and business credit reports, gather your current tax returns, and create projected revenue estimates. For banking requirements, make sure you have a U.S. address for correspondence, initial deposit funds ready, your business documentation in order, and identity verification documents prepared. And for system setup, configure your accounting software, set up payment processing integration, create client notification templates, and establish a compliance tracking system. Transform your international business banking today. Start with one step and build momentum toward a compliant, efficient banking strategy. If you want more resources on living and working abroad as a digital nomad, check out the link in the description below. Thank you for watching, and if you found this helpful, please give it a thumbs up and subscribe for more content on international business and expat life. Drop a comment below if you have questions about your specific situation, and we'll see you in the next video.